practice, however, there was less clarity and candor, sometimes considerably less. These new financial organizations were not exactly the brokerages and first national banks of our parents' era. But that's part of the staggering transformation, one of the greatest stories never really told. Between 1987 and 2007, debt, in all flavors, from credit card and mortgage to staid U.S. Treasury and exotic Wall Street, became one of the nation's largest, fastest-growing businesses. Over those 2 decades, so-called credit market debt roughly quadrupled from $11 trillion to $48 trillion. This was abetted by a revolution in marketing, packaging, and propaganda. In reality, public debt wasn't the big ballooner. Private debt was. Without much publicity, the financial services sector, banks, securities, consumer finance, insurance, and mortgage finance, muscled past manufacturing in the 1990s to become the largest sector of the U.S. private economy. By 2004 to 2006, financial services represented 20 to 21% of gross domestic product, manufacturing just 12 to 13%. And finance enjoyed an even bigger share of corporate profits. Risky doesn't begin to describe this new focus in the American economy. Binging on debt is reckless, and financialization has a long record of being a dangerous late stage in the trajectory of previous leading world economic powers. Moving money around instead of making things is always dicey, and the U.S. transformation has been the most grandiose to date. Since the 80s, 3 forms of assistance have been sought from Washington, and generally provided. Government bailouts when pivotal financial institutions, loans, or profit methodologies got themselves in trouble, liquidity from the Federal Reserve to keep the wealth escalators going, and benign regulation and lawmaking. Favoritism, it used to be called. One of the myths of the last quarter century has posited a U.S. economy smoother, better run than before, and burdened with only a few minor recessions. That's bunk. The official downturns, minimized, cynics say, by controversial federal statistics, can be queried on that basis. One section of Chapter 3 takes a close look at the case that the federal CPI revisions begun a decade ago understate inflation and overstate growth in the U.S. gross domestic product. Other debatable federal decisions on employment and money supply measurement also merit re-examination. More about the need to suppress volatility during the same period can be gleaned from the hair-raising repetition of federal bailouts and financial rescue missions, as well as from the roller coaster dips in interest rates as the Federal Reserve Board pumps the monetary pedals to save reckless financial institutions or reinvigorate deserving asset classes. Chapter 2 includes a short chronology. In the meantime, of course, the debt bubble, mostly private debt, has been getting bigger, and then still bigger. Not a few experts consider this a flat-out menace. I concurred in 2006 and agree still more today amid signs that the great bubble blown up over a quarter century is starting to quiver and leak. These are not circumstances in which a nation should put faith in an overgrown and overextended financial services sector with its bankrupt mortgage lenders, hotshot hedge funds, and reckless megabanks, several of which, fined years back for colluding with a scheming Enron, wouldn't know a civic obligation from a parking ticket. Which brings us to oil, or the combination of petroleum and the embattled oil-connected dollar as the second perilous component of the 21st century economy. One would think that with 2 former oilmen as president and vice president over the last 7 years, these anxieties would have been brought under control, but obviously not. One essence of today's crisis is that since the early 1970s, oil and the dollar have slowly changed from being a powerful strategic enabler of the United States to being an incipient strategic albatross. U.S. oil production peaked in 1971 and has declined since then, so that more than 60% of what is needed must be imported.